name is Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. Here is your weekly technical analysis of LME 3-month lead and tin. I'll start with LME 3-month lead. It's still comforting to see, even this week when prices have moved up so high, that the market is still just about keeping within the May to October 2020 bullish shift pitchfork. Prices have moved up from the support, the big old 50% Fibonacci line, the February 2018 to March 2020 move at 21.27, back in the middle of June, up through the middle time, currently at 21.95, out of the narrowing range formed over May and June, in what had effectively become a descending triangle that morphed into a bullish halfway hesitation. This leading to a move higher over the May high at 22.58 and the October 2018 high at 22.62. Then starting at the beginning of July, we have a contradictory actions day after day, usually indicative of pretty heavy indecision. This indecision was channeled into forming an ascending triangle over July. Last week we had a potentially seminal moment of a weekly key reversal up as the triangle came to a cusp. Initially looked like a false break lower as prices stormed up last week and broke up clear of the downtrend from late June. That was the upper trend line, currently at 23.34. Now back in June I laid out my thoughts on the action from mid-April being a possible very large bull flag stroke halfway hesitation. Thus I'd placed a target X1 in the 23.71 area to give a conservative target for such a pattern. I'd also mentioned back in June, maybe even earlier, of another possible pattern. This other pattern was for a bullish cup with handle pattern. You see, the action over late February looked promising and suitable for such a pattern. I was confident enough then to leave a target X in the 23.51 area. Those were the opportunities on the upside. Let me just clarify the current situation. Target X for the bullish cup and handle pattern in the 23.51 area, and target X1 for the bull flag stroke halfway hesitation in the 23.71 area have both, satisfyingly, been achieved late last week. Finally, we have the very recent descending triangle pattern. It was broken in between my commentaries, so I could not give an idea of A, which way was the move, and B, how much it should be beforehand, because the measurement had to be taken from the break in the trend line. I could only confirm the move higher was already reached the potential target topside in the 22.75 area. This sometimes happens when the move is so fast. So basically all bullish patterns targets have been achieved. So what now? Well, we seem to be having some topping action going on, as prices have come back off after reaching all targets on the upside. A certain symmetry there, I think you'll see. We now have the support congestion from the ascending triangle below the market from the 23.31 area down to about 22.80 area. Overcoming this would indicate a strong recent bearish incentive. Yet this market is still overall bullish. As I stated back at the start of this and earlier commentaries, we are still within, if only just after late last week's action, we are still within the May to October 2020 bullish shift pitchfork. LME 3-month tin. As I keep repeating here, the overall bullish incentive is still alive and strong here. It thrives. The original move up, which started some 20 weeks ago, translated to a higher level some 13 weeks ago when prices moved up over the middle time, currently at 31.985, and reached up towards the upper time above, currently now actually at 34.365 of the January to March bullish shift pitchfork. Prices most recently reached up and pierced the upper time last Friday, even making a second all-time high close yesterday. This was important, as prices seemed to stall early last week at the accumulation of congestion you can see around the 33.450 down up to about the 33.475 area, a fairly narrow band. However, the same bullish shift pitchfork that had managed to move prices up from 23,000 area back in March up to where we are now pushed them yet further still today for a new all-time high. The cost of rising so much may mean that today we actually end up with a bearish pattern, a possible bearish engulfing pattern. In all this recent activity, the market seems to have created since late June a possible bull channel. Currently 33.495 to 33.040 is the most recent. This is not set in stone, but it does fit the bill. Overall, as I said last week, a Until this pitchfork is broken or amended, then it will still govern the bullish incentive. Bullish shift pitchfork is still the one thing this market has to deal with. Thank you for listening. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted with this broadcast. Copyright is Tofpik and ADM Investor Services International Limited. And here comes the final bit.